So we've established that due diligence is a fundamental procedure within the scope of precisely banking and corporate law. But remember, in the context of preventing money laundering, it's obvious that it takes on an absolutely key role because it serves as the important tool through which financial intermediaries and banks conduct a deeply legitimate analysis of the identity, the economic profile, and the level of risk associated with each individual client. The obligation to conduct due diligence activities in Italy stems primarily from Legislative Decree 231 of 2007, which essentially just incorporated the European directives on anti-money laundering. In short, I was just as an aside looking at the sources, I would say that I wanted to point you to a specific source, perhaps. Yes, I would say that this is the AML directive from 2018, in short. The more in-depth content on due diligence operations you can find it precisely in Directive 843 of 2018. The term, coming to the origin, the evolution of the concept, right? We can say that the term due diligence comes obviously from Anglo-Saxon law, and originally it indicated the concept of due diligence, just as the name itself implies. The careful and thorough diligence that is owed by a party who is about to enter into a contract or a corporate acquisition. The objective or the main purpose was to carefully and systematically investigate, examine, and review all relevant information, facts, and details before making any final decisions or commitments. Well, at the time, it was to investigate and evaluate the economic, financial, and legal soundness of the other party. With the evolution of AML regulations, AML, I remind you, means anti-money laundering. The concept of due diligence then expanded beyond simple commercial law, becoming a fundamental safeguard for banking compliance and the fight against financial crime. So, to be clear, when they tell your client, your corporate client, your entrepreneurial client, yes, we have to do the due diligence, we have to do this, the focus is always much more on the second aspect. That is the fight against potential violations of banking compliance, the fight against financial crime. Okay? Forget the idea that, you look, you check, you just pay attention to the simple soundness of a company. The bank, first and foremost, intends to protect itself and to steer clear of being involved in legal actions or criminal investigations in any way. This is the interpretive pillar through which you must always understand the bank's operations and its approach to business. You'll recall I mentioned earlier the three types of due diligence. We said there was the so-called ordinary due diligence, CDD. In short, I don't want to test your English too much with the English acronyms, but anyway, we're talking about CDD, ordinary due diligence. So, and I repeat, it's applied to the majority, to the general client base. It's what they do to you. When you open a simple current account, even at the post office, mind you, this due diligence involves, as I said, identification, verification of personal data, and especially the acquisition of information about the purpose and nature of the relationship. Why are you opening this account, this position? What types of transactions will you carry out? For what purposes will you conduct these transactions? Obviously, the assessment of the risk profile of the client who wants to open an account comes into play, but and I remind you and I remind myself, and I must stress this. Remember that there will always be constant monitoring of the relationship. Today, the monitoring of bank accounts is carried out also through computerized algorithmic analysis. In fact, the stated purposes of your daily bank transfers are studied and monitored by algorithms. And when something, let's say, is detected as non-compliant, it immediately goes to the due diligence desk for any necessary assessments. We said that then in the basket of options there was EDD. That is, there is rather enhanced due diligence, which is mandatory for clients and transactions considered high risk. So, who are these people considered high risk? The famous PEPs, that is, politically exposed persons. In fact, you know very well that in bank questionnaires or when entering into any type of financial contract, you're always asked if you or a member of your family is considered a politically exposed person. It's also necessary to verify if the client has or may have dealings with high risk countries. According to the FATF list, there is a list of at risk countries. So, on this point as well, for yourselves and for your clients, you must ask, you must verify. Those of us who work in international law, we deal with the FATF on a daily basis. For instance, just think about when we have to receive fees from, say, unusual countries or from countries that are, considered blacklisted. It happens often, right? For example, having to receive payments from the Arabian Peninsula, from Singapore, from Hong Kong. Well, these are FATF countries. So even we, for example, as a law firm, which in some ways is a type of business, find ourselves dealing with due diligence issues and having to confer with the people in charge. And so, since we confront this as a legal business, as professionals, you can imagine we certainly do it when we have to deal with the clients whose interests we protect. Enhanced due diligence, of course, covers both the individuals and specific complex transactions, which are usually high value or lack any apparent economic justification. I mean, if tomorrow morning Mrs. Tomei sends 90,000 euros to Spain, someone is going to wonder why she's sending it, who is sending it, and with what justification, right? And that's precisely why the bank often asks you for the famous supporting documents. Yes, you're sending this transfer, but why? Give me the justification for the description. I repeat, the banking world is a world that should make us, not the banking world, but the world of rules governing the banking world. Although, let's say, it responds to the need for verification and for fighting crime, it should also make us question the amount of real freedom that an individual has today in moving funds, acquiring assets, and spending financial resources. In my personal opinion, there are also issues of, let's say, broader freedom that should be, at the very least, carefully and critically examined to see if indeed all of this implies or does not imply a serious restriction on the personal freedom of each individual. But anyway, the implications of enhanced due diligence are essentially three. The increase in checks, so we have more checks on the origin of the funds because that's what interests the bank. The request, therefore, for documentation is additional and explanatory of the movements. And never forget the authorization from top management to start or continue the relationship. That is, there will always be an area director, a desk director who can decide, just like that, to cancel or withdraw from the banking relationship for the simple reason that they didn't like a single transaction. In the next In the next lesson, I will talk about the danger, for example, of the world check. You know that today banks can decide to remove you from their clientele for the simple reason that there is an internet article that talks about you in a questionable way. I also, in fact, inform you that banks, almost all banks, pay large service providers that through spiders, that is, algorithmic controls, conduct research about you, at least on open sources, so on Google, on Bing,